please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Just starting north of 10,400, 10,404 as we speak, down 76.
I don't think we should expect too much from this earnings season. I think the earnings recovery, such as it is, will fructify next year.
What we are looking forward to in the next 3 to 3.5 years is to yet again double our loan book.
Big relief coming in for Jaiswal Nico. Insolvency, the IBC proceedings have been put on hold.
Disappointment basically stemming from the margin, and given the recent rally, that's being reflected in the stocks.
So that's much lower than the poll, and of course lower than even the month-on-month inflation, which is of course very positive.
7 points change in the Nifty, beg your pardon, 10,487.
So it's been a strong day for the bulls. The Nifty closes above that level of 10,500, and the good part is that the market ended at the high point.
Dalal Street gains for the 8th straight day as markets outperform global peers. Sensex rallies over 100 points while Nifty ends above its 100-day moving average. Mid-caps outperform.
And the IT index slips in trade in the last hour of trade. Infosys and Wipro, they are the key laggards. Other IT stocks like TCS and HCL Tech, they clock gains courtesy of weak rupee.
UCO Bank tanks to close 7% lower in trade after the CBI books its former CMD Arun Kaul in an alleged loan fraud case. DCB Bank gains 6% on the back of good fourth quarter numbers.
And Tata Motors nosedives after reports that JLR will announce job cuts in the United Kingdom. On the other hand, pharma major Cipla zooms over 5% as US drug regulator issues no repeat observations to the company's Indo unit.
The Met Department is confident that India may not experience rainfall deficit this year. It actually predicts 97% chances of a normal monsoon. Assessment of the exact onset of the monsoon date will be done by May 15th. Well, those were the top 5 headlines from the day's trading action. Hello and welcome to Markets Today Talkback, the show where we tell you all about 8 hours of trading in just 5 headlines. I'm Lata Venkatesh, with me my colleague Nigel D'Souza. Hi, Nigel.
Well, thanks for that, Lata. Over the next 30 minutes, we'll discuss the top 5 market headlines and our experts will answer all your stock queries. Join us now to answer all your stock queries. We have Dipan Mehta, member of BSE and NSE, and our technical expert, Ashwini Gujral. Thanks so much for joining us on the show, gentlemen. But before we come to you, let's take a look on how the markets fared in today's trading session, Lata.
Oh, well, like we've been saying in the headlines as well, it's raining good news, literally. And we did see the Sensex and the Nifty end with almost 0.5% in terms of gains. And for the Nifty, it's important because it not only crossed psychologically important in the round figure of 10,500, it was emphatically above that. And after the second half of the day, it trended upward so that even if you had bought any time in the first half of the day, you were in the money by end of trade. And that's true of the Nifty, the mid caps, as well as the Nifty Bank. The gaining stocks, maybe the losing stocks important because Infosys kept all the IT stocks down, and this is despite having a weak rupee as a tailwind. So clearly, Infosys was more important than the rupee for the IT stocks. But just a word on the other stocks, lower inflation, the WPI number coming in lower, and Friday's successful bond auction kept bond yields lower, and that had a beneficial impact on NBFCs, banks, consumption stocks, a whole host of them. So that perhaps was the positive which yanked up the market, gave the Nifty Bank as well its staying power. But you want to identify some specific stocks?
Yeah, that's right. Lata, as you said, on the day when Infosys loses out, it ends with a cut of around 3.5%. When you have Tata Motors down another 3.5%, 4-5% approximately, both those two, they ended with sharp cuts, and yet you had the Nifty putting on good gains. So that's telling you that, in fact, every now and then, it's like, in cricketing parlance, every time a Dhoni doesn't perform, you have a Rohit Sharma, you have, a Kohli who comes in there and is delivering the goods. So that was pretty good news. In today's trading session, Cipla did so well. We had Grasim as well that did do well. UPL, remember, that's been a big outperformer. It continued to do well, up close to around 2.5% in today's trading session. And domestic-facing themes, something like a Hero MotoCorp, that did well. Remember, the sales growth have been very, very good for Hero MotoCorp. So that was up close to around 2%. And bond yields cooling down. Some of these stocks, again, India Bulls Housing Finance as well, did quite well. But otherwise, plenty of gainers from the broader market, Lata. And as you said, you bought at any point of time during the day, you would make money. We woke up on a Monday morning saying, oh no, there are a lot of headwinds. But by the end of it, you brushed all of that aside. 8th straight session that the Nifty was gaining. So DCB Bank, good performance there. DHFL as well did well. And even a stock like Arvind that doesn't look very, very cheap on a valuation front, well, that gave you strong returns in today's trading session. Now all eyes are on the monsoon. How is that going to pan out? So in escorts as well. Now it's nearly ₹1,000 stock. I remember a few years ago it was struggling 200, 250. Now it's nearly around $1,000.
Yeah, cycle changes. But clearly today you had the monsoon theme playing as well as the low bond yield or low inflation theme playing out. But how far do the good times last? Do you take long bets even at this juncture? Let's ask our experts. Ashwini Gujral and Deepan Vetar are with us. Ashwini, first to you. You've been saying that we are at the higher end of the band that we've been trading in. Chances that we would break out the higher end?
Well, that appears to be the case because so far, we've maintained the 10,400, 500 band. So after a large rally, when you have a sideways move, often you come out on the right side. Now today's monsoon forecast is a bit here and a bit there. So that may again make you, probably go down to 10,450 thereabouts. But finally, all dips are getting bought. So at some point, we should get towards 10,600 and maybe even higher.
Okay, all right, 10,600 and then maybe higher. But let's get straight to our second headline then. Tech stocks, they were in focus today. The index fell in the last hour of trade because Infosys and Wipro, well, they were the key laggards. Infosys fell more than 3% as investors were disappointed with the cut in the company's margin guidance, while Wipro fell close to around 1.5%. However, IT stocks like a TCS and HCL Tech, they clocked in some gains courtesy of weak rupee, which slumped to a 5-month low.
Okay, well, that's the word coming in on IT stocks. Let's see if we have any questions coming in. Oh, yes, there is a Twitter user called Angad. He has 500 shares of Infosys that he bought at 1180 a piece. He's a short-term investor, he says, wants a view on the stock for 1 to 2 months. So I'll go to Ashwini first, but Deepan, we would want your view as well on Infosys. But first, Ashwini, for the nearer term, Infosys, should he keep it at 1180?
It wasn't very brilliant to have bought at 1180, but he has a clear stop. If we break today's low, then his short-term trade is over. Long-term investors may have bought today, but then they are willing to see more sideways. So keep a 1100 type of stop in case we start moving above this 1200, 1210. And maybe even 1300 could be on the table, but you should often be in strong stocks which are making new highs. Infosys doesn't quite fall in that category. If you have to do short-term trading, you get into things like Jubilant, Titan, Escorts, etc.
Okay, all right. Talking about IT stocks, I think we have another caller who is calling in with regard to TCS. Mr. Singh is calling us from Jharkhand. He has a question on TCS. Hi, Mr. Singh.
Yes.
Yes, sir.
Actually,
what's your query?
I bought TCS at the average price 2,800.
Okay.
I'm a long-term investor. I want to know what is the future of it.
Excellent. All right. Let's try to help you out with this one then. Deepan, coming across to you, you haven't been a fan really of some of these frontline IT stocks. Have you changed your stance now or on an Infosys, on a TCS, or any of these other frontline stocks?
No, on the contrary, I think our conviction to exit all software companies has only got strengthened after Infosys' number. And what I have been saying all along is actually playing out, that the new digital offerings are just not enough to compensate for the kind of intense competition and stagnation of volume which is there in existing services which IT companies are offering. And at best, the sector can grow at a high single digit. And you could have a lot of companies within the sector just having stagnated or growing at a very low or negative growth rates as well. And such a scenario, I think as a long-term investor, short-term, medium-term, I think whichever you classify yourself as, you should be looking at exiting out of IT companies either at these levels or at every trading bounce which takes place. There are many other exciting stories, could be in private sector banking, NBFCs, consumption-oriented themes, I think, which can easily deliver 15-20% type of top-line growth. And so those are the kind of returns that one can therefore expect on the stocks as well. So I would say that it's still not too late to exit out of IT companies and switch out of those companies into some of the other domestic-oriented businesses.
Okay, that's unequivocal advice that you should drop out of IT companies. Mr. Singh, if you're still on the line, we will try and get a technical view as well for you. Ashwini, would you say he's still in the money, making about 400 rupees per share? Should he book it?
See, has a good price, and so far it looks like it's going towards fresh highs. Probably the results will dictate that, but it didn't really come off post Infosys results. So if it does break out of 3200, 3250, I think 36, 3700 is a likelihood.
Okay, all right. So that's about IT stocks. But Lata, I wanted to ask you about the Indian rupee. Plenty of headwinds today is what we saw, and that's why it was at 5-month lows.
Yes, we did begin with a higher trade deficit for March, higher than expected, that is, and crude that looked like going well over $72. Of course, through the day, crude did decrease. For IT companies, a weak rupee is a minor tailwind. It's not as important as bond yields are for an NBFC company. It's not that material. It's a minor material. At the moment, the IT stocks chose more to be guided by the performance and getting a little worried about whether other IT companies will do any better. Rupee as well did not keep its weakness through the day. We saw that weakness receding a bit. But we'll have to really wait and see. If dollar globally starts weakening, then rupee will not weaken much. If dollar strengthens, then all this bad news of higher expensive crude, poor export performance will all start hurting the rupee. At the moment, it's being cushioned because oil also receded a bit, and dollar globally remains weak. I mean, it was just a minor show of strength.
Okay, all right. Lata, thanks so much for that. Well, get straight then to our third headline. Let's shift focus to the banking space. UCO Bank tanked in trade, falling close to around 6.5%. This comes after the CBI booked its former CMD, Mr. Arun Kaul, in a case of around 630 crore rupees odd. However, on the other hand, we had DCB Bank that had a good run on the back of a strong showing in the fourth quarter. The stock gained close to around 6% in trade. The bank saw strong loan growth and improvement in the asset quality. On that note, let's listen in though to the MD and CEO of DCB Bank on their future plans.
If you look at our loan book 3 years ago and now, we have almost doubled it. And what we are looking forward to in the next 3 to 3.5 years is to yet again double our loan book. And that's a trajectory we would like to kind of achieve. Step by step, we want to reduce our cost-income ratio. What we are aiming for is by fourth quarter of 2018-19, when we exit this particular year, we want to be at about 55% cost-income ratio.
I'm sure a lot of people have questions on DCB Bank and whether it should be bought. And here's one such person. Sauman Ghosh has tweeted to us with a question on DCB Bank. He says 200 shares of the bank was what he bought at 147 rupees a piece. He wants to know a view for the year. Deepan?
Well, first, a disclosure that we and our clients have been long-term investors in DCB and are really pleased with the numbers which have come through. And I think the strategy of the management to expand the branch network 2-3 years ago has played out exceedingly well. And I did hear your interview, which was excellent. I think you got all the points out which were relevant for an investor. And what stuck in my head is that if they're going to double the balance sheet 3 years from now, then I can be rest assured that the stock price will double 3 years from now. And that's fantastic, but that's about a 24% type of a compound return that one can expect in DCB. And as such, I think it's a very well-run bank, very good control over its NPAs, and very focused on SME and retail lending, which is the kind of themes that we are looking out for in private sector banks. And there's one angle which could be explored here, that is the M&A angle. there could be some sort of a acquisition, or it could be acquired by a larger bank. I think all those possibilities are also open. So I would say the investor should remain invested on a long-term basis in DCB. It's one of the few private sector banks which is in secular growth mode, and I think it should do exceedingly well and deliver very good returns going forward.
Okay, all right. So that's about DCB Bank there. And Deepa, I'm quite confident that the bank's going to deliver in the next couple of years as well. But our next query as well, we have from Mr. Sushil Ahuja from Punjab, has sent us a question via an SMS. He has around 1,600 shares of UCO Bank, bought at around 80 rupees a share. He's been holding it for 3 years now. Wants to know whether or not he should hold on or sell it. 1,600 at 80 rupees. Ashwini, coming across to you, your take on UCO Bank?
I don't think it's going to 80 bucks. It's tough going. He needs to get out and probably enter DCB Bank. So, PSU banks, particularly the third rung, are totally no-hopers. Even the first rung, SBI is hanging around, recent lows, while the Bank Nifty has rallied almost 1,500 points. So I think PSU banks are best avoided.
Yeah, I think he has bought it as a trading strategy perhaps at some point in time. But it's not reached that level in many years. So clearly sitting on a huge loss, which he should perhaps cut. That's the advice from the expert. We take a break on that note, and we will, after this break, continue with our experts and answer lots more questions. Back in a jiffy.
Still with us on Markets Today Talkback. We have Deepan Mehta as well as Ashwini. They are with us to answer all your stock queries. We're through with the first three headlines of the day, and let's get straight to the fourth headline now. Stock of Tata Motors, that was under pressure. It was down close to around 5% on the buzz that JLR will announce job cuts at their UK plant. According to reports, JLR will not renew contracts of 1,000 temporary workers. This is expected to help the company in its cost reduction measures. Onto the pharma space then, Cipla zoomed more than 5% in trade today. This comes as there were no repeat observations issued to the company's indoor unit by the US FDA. Let's hop across to Ekta Batra. She joins us with all those details. Ekta?
I'm picking up from my sources with regards to Cipla that their indoor unit has in fact been inspected by the US FDA. This particular inspection got completed on last week itself, and it had begun on the 2nd of April. So it was quite a long, extensive inspection which had taken place. Now, I do understand that it was basically completed with no adverse observations, no data integrity, and neither any sort of adverse observations, primarily from the management. So it'll be interesting to see what exactly the Form 483 would contain. But overall, we understand that it is something which could probably be resolvable at this point in time. It is a new facility. Filings are increasing from that particular facility. Separately, I just want to add that there is a DB report which has mentioned that Cipla has gained around 7.4% stake or market share in a particular drug, a Loxy generic, which they had launched as an authorized generic in the US markets. It's a chemotherapy drug. So positive news coming in there for Cipla.
Okay, positive news, pushed it up 5%, and somebody has those shares. Nishit Bhatt has called us from Gujarat with a question on Cipla. Mr. Bhatt, go ahead. What's your question?
Yeah, good afternoon. I had purchased more than 500 shares of Cipla at 630 about a year and a half back. Now, despite three very good results, and as you said just now, that US FDA has also no problem with its inspection, why does the price not go above 600? Or, putting it differently, when will the price go to 600 and above?
Okay. Deepan, can you help this gentleman?
Yeah, well, I think, despite positive news, I think the overall sentiment in pharma remains extremely poor, and there's still a lot of fear that the pace of commoditization within the sector has not changed at all. And although Cipla is making marginal gains in the US market, end of the day, I think the pricing pressure is intense, not only in US, but in other geographies as well. And given the kind of present valuation of the company, I still don't see that great a future for Cipla from at least the investor's perspective. We remain negative on all large cap pharma companies, especially those which are export oriented. And I would say it's better to cut your losses in Cipla and get onto something which is more domestic focused. Could be auto industry, could be banks, NBFCs, appliances, building material, media, retail. I think there are many other sectors where there is nice growth trajectory and don't have the kind of challenges which pharmaceutical companies are facing at this point of time. So while you may see a nice trading bounce in Cipla and you could have a good number coming in from Cipla as well, these are not great long-term stories and will not create much value from this point on going forward.
Okay, all right. A switch is what Dipan is talking about to maybe autos or more domestic-facing themes. But Ashmi, very quickly, if you could tell us your view on a Cipla?
This was what we were talking about in the closing bell, that because of the sector, etc., even a good performer is not able to move up in price. It's basically, between 520 and 650. If I were in the place of this gentleman, I would move on, because there are many other sectors which are making new highs and making them fairly easily in consumption and rural plays, etc., autos. I don't think pharma is going to quite give him the returns that he's looking for.
Okay, Mr. Bhatt, that's the advice, unanimous. Both experts think that it's best to take profit or book loss and move on. Dilip Chakrabarti has sent us another question. This is via SMS. He has 50 shares of Tata Motors bought at 460 rupees. He's been holding the stock for 5 months, wants to know whether he should continue to hold or sell. He describes himself, though, as a long-term investor. Kept this stock only for 4 to 5 months. Ashwini, what should he do?
When your stock is not performing, you become long-term investor. I don't think that's a long-term investor.
Okay.
So it's going down. It had a bit of a rally. Again, it has collapsed. So I would exit. I mean, there are many better stocks. Even if he buys Escorts, tomorrow he'll probably make much better money than being in a Tata Motor.
Okay, all right. Now it's time for our final headline of the day then. The Indian Met Department is confident that India will not experience a monsoon deficit in this year. In its first forecast, it has predicted a 97% chance of normal showers. Assessment of the exact onset of monsoon will be done in a month's time. Let's listen in to the director of IMD himself.
Now coming to the forecast of ENSO based on among CFS, it is indicating that the present weak La Nina condition observed over Pacific likely to become ENSO neutral just prior to the monsoon season. So this is indicated here. So currently weak La Nina just minus 0.5. It will be closely by JJA. It will reach to neutral condition.
Okay, well, that actually was the technical background to the forecast. The forecast is 97%. That's all we have. Oh, we thought we could get some questions on monsoon-related stocks, but unfortunately, we are out of time. Deepan and Ashwini, thank you very much for joining us and answering questions of all our viewers. And with that, we wrap up this edition of Market